We're live for the Mike and Mario Show Friday edition. Excited to be back. Looking forward to connecting and lots of things worth touching on, and as well as sharing our thoughts and ideas on what's happening starting next month, next week. So, Mario, before we move forward, how you doing, my friend?
I'm doing well, Mike. I hope you're doing well as well. It's cooled down here in the UK. So we had a heat wave for maybe 36 hours. And they were all going about, we need a climate emergency, but it happened. It's been happening for decades. You get a few days of a heat wave.
Right. And that's what summers are usually about, unexpected heat. But then again, that's sometimes refreshing depending on how you look at it. But of course, on this side, Biden is talking about a climate executive order that's coming. So whether the heat goes down or up, it doesn't matter. I'm thinking like summer comes to an end in the next couple of weeks and it's going to get cool again. But what about why the emergency? Why do we need the executive order for climate? So we know there's more to that story. But anyway, hope everyone is doing well. Welcome to the Mike and Mario Show. Lots of things worth touching on, of course. Numbers coming out today pointing more towards the future or the direction of the economy, and it's not looking too positive. And before we dive into that, just want to start off by sharing with you a very interesting perspective given to us by a mainstream economist, nevertheless. And I thought this was worth something bringing to your attention. And so, as the PMI numbers has been revealed, this gentleman here says the U.S. economy is contracting at a rate not seen since the global financial crisis in 2009, excluding the lockdown, as the flash PMI covering output of manufacturing and services fell sharply in July. And so here we have the visual aid showing how bad things appear to be, or how they're turning out to be. But Mario, were you surprised at all when these figures came out well below expectations, to say the least?
Yes, I was. But I'm not surprised with the direction in which they're going, because the yield curve, U.S. Treasury yield curve, has been pointing to a recession because it's inverted. But I was surprised with the fact that they were very low, a lot lower than expected, as you can see here. I'll
do me a favor, zoom. Yeah, I'm saying zoom in. So yeah,
the U.S. Services PMI came out at 47. It was expected to drop by 0.1. And that's a huge. I mean, it's a huge drop. It's like a crash. And what does PMI mean? Well, it means Purchasing Managers Index, and it's a survey of all the of purchasing managers of big businesses, and they asked them what they think, what are they seeing in terms of orders, and a number below 50 means that usually means the economy is contracting, and the number above 50 vice versa. And you might ask, what about manufacturing? That's still above 50, but we know now that the US and even the UK economy, most of it is we're service economy. So I think this is very serious. And then you go to Europe earlier this morning, you had the French PMI. You see here the manufacturing that dropped below 50. It wasn't as bad a crash as the service PMI, but yeah, and the German as well. It dropped to 48. The composite, which is both together. And look at the manufacturing, the service. They're all below 50. So this is showing me that the ECB, of course, they raised rates yesterday for the first time, I think, in 11 years. And I think they're not going to be raising rates that much more, because unless they want to keep raising rates into a recession. And the same thing for the Fed. We're speaking about this before we came on. Next Wednesday, they'll decide, FOMC. I think they're going to raise by 75 basis points. And I have a feeling that's going to be the last rate hike of this cycle, especially when you look at what's going on. And the day after, we're going to have GDP data for the second quarter. The Atlanta Fed, they see it coming negative, and the markets now are seeing it come a lot closer to zero. So that's the way I see it.
Yeah. Now, to think about the economy contracting, even the narratives have changed. No more recovery talk. Is more so now politicians as well as the central bankers are talking about the issues we're facing, but then again, they haven't reversed course as of yet. And so you're saying the next week could be the last one. And then I saw another article referring to how the ECB, now that they're neutral, or they made their way back to zero. Somebody out there threw out, the fight that they see by the end of this year, the ECB going to having a single point of their Fed of their interest rate. And so I'm thinking like, why are they trying to sell the idea that they can get to a certain number by the end of this year when everybody knows, even themselves, they know that things are tightening up severely. So they're tightening into, we've gone past the point of a recession, I think, based upon all the indicators, and it's going to be a lot worse. But my thing will be why? Like, what can they really accomplish in trying to continue to hike in such tight conditions? It doesn't make sense. But I was assuming they know exactly what they're doing at the end of the day. But what do you think?
I think it's because prices are rising and
Mm,
they've lost control of it. People call it inflation. I call it prices.
mhm,
They've been inflating for over a decade, and yeah, they have to make it seem to the markets and investors that they're doing something about it. But they're between a rock and a hard place, and we've been saying this, you and me and others in the alternative,
mhm,
that they're going to have to pivot. I'm not sure if they're going to pivot right away, because usually you stop raising rates and then you wait a little bit and then you start cutting. But the way things are going, the way the data are coming out, and the way the yield curve inversion of the twos tens
mhm,
is continuing, makes me think that there could be another excuse for them to throw everything at it again, and it's going to be even more, I think, QE,
mhm,
and even more rate cuts. At least the Fed will have been able to raise rates from near zero to maybe 2%, and they'll
mhm,
be able to cut again. The ECB, they're going to be in a tough spot. They're going to have to cut again into negative territory. I don't think they're going to be at zero, above zero, for that much longer. But yeah, I think it's just trying to maintain their credibility, and I think they're gonna accept the high CPI or inflation
mhm,
at the expense of the currencies. And I did a video yesterday. I found, or the day before yesterday, I forgot exactly, but I found out that in the UK they're already doctoring the inflation data. So
mm,
uh, I found in the Bank of England website, there's an inflation calculator, and I've looked at this inflation calculator for years. And last year, if you type 1997 to 2020, the CPI averaged 2.7.
mhm,
And I did the same exercise a few days ago, and now it's 1.9. So
mm.
the gut,
Fudging the numbers.
even, yeah, so they're gonna fudge the numbers again, and that will give
Ooh.
them the excuse. That's the way I see it.
Now, so fudging the numbers is to be expected, I think, because you can no longer hide, the truth. The data reveals that things are very problematic, and so over here with the Federal Reserve, and I remember talking in the beginning of the year, talking about the tightening aspect, everything they were planning on doing. Now the question is, I think we or most people have disregarded or not talked about much about the drain of the balance sheet, as well as, of course, other than interest rate hike. That's part of what we talk about here. But the question is, who's actually buying these debt obligations at a time where everybody nationwide seems to be unloading. And so is the Fed actually back in the game of buying, or have they never stopped? The reason I mentioned that, because I want to share with you that little screen that I put up there from Oliver, one of the guys I had on the show before. And his comment was, Federal Reserve balance sheet is up again. No sign of real balance sheet reduction. At the same time, the reverse repo is about to make new all-time highs. And so, once again, when I was talking to Oliver, he was referring to how the reverse repo and the current inflation rate are running parallel. And as the inflation rate go higher, he was saying that the overnight reverse repo was front running the actual CPI numbers we were given, and he overlaid both of them, and they were looking mighty correlated. And I'm thinking like, wow, like he's like, we're nowhere near where this thing is at this moment. So there's
Mm.
a lagging between the current CPI and the 2 point some trillion on that balance sheet. But so to date, it looks very, very similar in nature. And he was talking about 9 point something well before we got to the official figures from them. And so anyway, I'm ranting, whatever. But Fed balance sheet at this current moment, he was saying that there's no way they can really drain this without really basically pulling a plug on the entire monetary system. And so, what are your thoughts on this, man, with the balance sheet?
Well, I was reading that they were supposed to start QT, quantitative tightening, which is
Hmm.
actually different from. I mean, tapering is when they stop buying gradually,
Gradually, yeah.
and then they leave it there. They flatten. They they leave the balance sheet flat.
Hmm.
Tightening is when the balance sheet starts coming off.
Right.
When they and they're supposed to start tightening on the 1st of June. Here we are, 22nd of July,
Hmm.
and I think the balance sheet has shrunk by about 16 billion
Hmm.
in 8 weeks. So it's not really significant.
Yeah.
And recently, it's actually gone up. So the other thing you asked the question, who's buying these treasuries? Well,
Yeah.
I think you have to look at Japan a little bit for
Mm.
that
Hmm.
conundrum,
Yeah.
and also the banks because and also funds, pension funds. They're
Hmm.
required a lot of times by law, by regulations to have treasuries. And
Hmm.
the Japanese, what's happening there is that the BOJ is trashing the yen. The yen is collapsing. They're keeping rates pegged near zero. So Japan, I think they have the biggest. They're the biggest savers. The Japanese public. So there's a lot of funds in pension funds, insurance. So they go abroad to get yield. So
Hmm.
they're probably buying treasuries. They probably even buying um, UK paper, any paper that yields more than zero. They're buying that, and especially with the fact that the yen is dropping. So that's a double whammy.
Yeah.
They get the currency appreciation and the yield. So I think that's why that's happening. When that could turn is when the Bank of Japan and the general public in Japan says that's enough. We want a stronger currency, and then they'll have to give up on this accommodative policy.
All right. Wow. Now you mentioned, like of course the retirement funds and all the investing vehicles that they or investing institutions they have to buy. And I'm thinking like at some point, I know that money manager, an advisor, you realize the problem at hand, but yet you're obligated to continue to buy to support the shenanigans. And I'm thinking like that has to be some type of moral or some type of conflict.
Yeah, well, I think for us it's pretty clear, even though it's not guaranteed, that we're going to continue to see debasement of the currency. We're going to continue to see inflation or rising prices. But
Mhm,
believe it or not, I talked still to some people who were involved in the markets,
mhm,
and there's one guy. He recently retired, but he's a bond guy, and he seems to think that inflation is going to come down. So I think a lot of the mainstream market people and
mhm.
investors they think that a recession will mean that inflation will come down and that bonds are going to do well again. And I think that's one of the reasons. I think they're going to be proven wrong. I mean, right now bonds are going back up, the
Mhm.
prices and yields are going down, but I think the trend that we've seen since the early 80s of lower yields
Mhm.
is ending. We're now going to see higher lows and higher high in yields. And up
Mhm.
until recently, we always used to see lower highs and lower lows, which is
Mhm.
a good thing for bond buyers.
Yeah. Interesting. Now let's turn our attention to metals, and especially I want to get your thoughts on. We're talking before about uh the recent activity. So this is the last 5 days in gold price in dollar terms. So I go last week, and so like one thing that's just anomaly or what, but were you paying attention to whatever news or whatever happened at this event where there was a major sell off, and then of course.
Yeah, I'll can I I'm gonna share one of my charts here if that's
Yeah.
all right. Let me because I can what I think happened yesterday was significant because um the gold price went very near, as you can see here, the low that we saw in the
Mhm.
last 2 years, which is around 1670.
Yeah.
So I'm gonna zoom in. So you see there we went to 1680. And let me this is a weekly chart, but I'll put it in the daily. So you see, we went to 1680
Mhm.
early in the day, made a new low, and then we managed to close above the previous day high. And this is called an outside day, which means the candle on the right is bigger than the candle on the left, and you close up, and that's usually a sign of a reversal, short-term reversal, and we've continued higher today. So, and then I'm going to zoom back out. So you can see it looks like we've held this here, because I
Mhm.
think if we'd broken this level here, it would have been, gold could have continued going down a lot more. So uh, uh,
Mhm.
in the short term, of course, anything can happen. But I think this is a good sign here for the precious metals, even though silver is lagging a little bit today.
Yeah. I was looking on a Twitter sphere, and David Hunter, the contrarian investor, everybody follows him. I noticed that he mentioned, and that's where it gets tricky when you start talking about reversals and lows and highs, and is this the bottom? I'm thinking like, we haven't really experienced the severity of what we all believe is coming. So how can we continue to use the word bottoms and things like that? Just
Yeah.
because I'm like, it's still early,
I
like we're
mean,
still.
I'm talking more for people who actually trade paper
Yeah,
gold,
right, right,
because if you have a real, gold coin here, you're not trading it; you're just
right.
holding it as insurance. But yeah, David Hunter, I don't follow him too much. He's got some quite contrarian views. I think a few months ago, he said he's seeing the S&P go to like 5 or 6 thousand.
Yeah.
So and he sees gold at 3,000. He's usually not a gold bull.
Yeah, here's that tweet I was referring to. This was from yesterday, but it says the morning gold sold down into the long-term trend line dates back to 2001, reverse upward
Oh yeah,
gold.
there's that trend line as well. Yeah, yeah.
Yeah, and gold and silver begins rally that will take gold up to 3,000 and silver to 50, coming in months. And so months, that could mean 12 months. I mean, who knows the time frame
Well, I
there?
think by months he means less than a year.
Less than a year.
But the other guy that I follow and have been following for a while is Bob Moriarty from 321gold.com.
Yeah.
And he's into gold. He has been, his website has been around for years. But a lot of times he's bearish as well. He's not always bullish. And
Mhm.
he was on with Elijah K.
Yeah.
Johnson of Liberty and Finance. And
Yeah.
he actually said, uh, he said he was mistaken in the last few years, because he's really worried now. He says it's crazy what's going to happen. He said, uh, "Do you worry about the price of gold in Zimbabwe dollars?" And that's what he said. You know, so that's what I'm trying to say here. If you're
Mhm.
trading gold back and forth, paper gold, not real gold, then yeah, you watch the technicals. And I watch it because of my background. I
Mhm.
like following the markets, but
Yeah.
uh, I, I think it's a very dangerous thing to. Yeah, you can trade paper, but keep your physical,
Mhm.
because it's going to get crazy, I think.
Right, I do agree, and it's a day of reckoning is drawing near. Local barbecue play employees at each of the shift, at end of each shift. All right, appreciate that, Jay.
Well, that I think I know what Valdez 5 is trying to say here.
What is
He's
that?
trying to say that because during the uh, Weimar hyperinflation in Germany, things prices went up so quickly
Yeah.
that let's say workers got paid after lunch, and
Hmm.
then their wives, because women didn't really work
Yeah.
that much, they came to the factory, and the husband would give them their pay,
Paycheck.
so they could go and buy something, because if they waited to the next day, they couldn't buy as much. So maybe that's a little bit of a sign of that. It's not as bad yet.
Yeah. Yeah. Interesting things, man. So let's talk a little bit about other events happening right now. And so I like to focus on, because it's when you this past week, especially when you type in the word protest, we had I guess I see we had Ecuador, we had Panama, we had a couple other nations that are
The
now hitting
Dutch,
the streets.
the Dutch are farmers, I guess, and
Correct.
Sri Lanka as well.
Correct. And so like the European protest happened to do with the the new legislation on cutting back on the use of the nitrogen and things of the fertilizer, things that hinder farmland and ownership of farmland. But then the protests happening in the underdeveloped nations are the ones happening due to the rising cost of living and fuel crises that they're experiencing.
Yeah.
And bit by bit, more people are hitting the streets, expressing their displeasure. And somebody
Yeah.
in the chat was like, Mike, he's like, how come I'm not seeing none of that? Or I'm not seeing none of that here. I'm like, be thankful, be grateful that you're not seeing that. Like, especially in the US and especially in the UK, we're going to be the last ones possibly to experience that. So that buys us time. So be grateful that, you can go down to your gas station and fill up still. And anyway.
You talked about the fact that the emerging market is more about fuel and food,
Mm-hmm.
and the Dutch is more about this climate, this change.
Climate
Yeah,
agenda.
but actually, if you look at Sri Lanka, they've been following the World Economic Forum,
Mm-hmm.
um, uh, route. And
Yeah.
I watched a clip of Tucker Carlson the other day,
Mm-hmm.
and he was talking about Ghana in West Africa.
Mm-hmm.
It's one of the richest countries in Africa, and he was saying that up until 2014, they were doing really well. They have a
Yeah.
lot of gold there. I think they have some oil, and wealthy country.
Mm-hmm.
And in the last few years now, especially this year, uh, they're having to ration electricity. They have a shortage of food. And he found out that they signed up to this renewable energy program. They signed up to this climate change
Mm-hmm.
thing where they, to change the way they farm. And now they're in trouble.
Right.
And it seems to be an agenda by the people in Davos, the people at the
Mm-hmm.
UN.
Right. And speaking of which, the IMF is still popping up as being the escape route for a lot of the, suggestions for these countries. So we'll come in and we'll make a loan. We'll loan you. We'll help you restructure your debt. And so I saw this: Ghana's unions and left reject bailout talks with the IMF as economic
Well,
crisis
that's
spiral.
good. That's good. The IMF is not your friend, Ghana, nor the World Bank.
Oh my goodness.
And what's his name? John Perkins spoke about that in Confessions of an Economic Hitman.
Mm-hmm.
And people need to wake up, especially in the emerging market countries. But even in Europe and in the US, they're doing this. They're trying to. Joe Biden is an economic hitman. That's what he is.
Yeah. And speaking of which, outside of the Western-led institutions, the new development bank that is a BRICS entity, they're also helping to rebuild and restructure debt situations in Africa primarily. But, the new development bank is out here extending loans as well to their own BRIC plus nation recommendation type countries. So, but it says how BRICS new development bank can improve transparency and accountability. And so this is to do with Africa. So the question is, will Ghana, for example, reject the IMF's method and accept the BRICS just because the BRICS might give a more friendlier? You can still own some of your property rights and your minerals, but we're still they're gonna want something back in return. And that's
Of
where it's
course,
like
yeah.
no matter who offers a loan, it's going to be problematic because they're going to have to give up something that they, I'm sure, don't want to give up. But corrupt politicians will do what they do. So anyway, let's keep moving, man. A couple other subjects worth touching on. And so the Bank of Russia, they seem to be doing counter to what the rest of the world is doing. And so Bank of Russia's dovish surprise
Well, that's a
brings
good
rates
thing, isn't
low.
it?
I mean,
That's
it is a good thing. It's just it's different.
if they're doing everything different than our central bankers, that means they're doing something right, I think.
And so also, but what came to mind when I first saw this was how Turkey also went against the grain and decided to drop rates at the same time everybody else was raising. I'm thinking like, we know that Russia, also Iran, Putin, and Turkey just met earlier this week, and it's good to say they make some deals and some things that are going to be announced really soon. But we got Turkey and Russia going counter to what the West is doing, so that definitely should tell us something. But what, I'm not quite sure, but we will find out. But
Yeah.
what were your thoughts when you saw this?
Well, I wouldn't compare Russia to Turkey in
Mm-hmm.
terms of the finances, but as you can see here, they raised rates just when the crisis kicked off or war kicked off in
Mm-hmm.
Ukraine from below 10 all the way to 20 because they knew that they were going to get their currency got hit hard. The
Yeah.
ruble, the dollar went up to almost 140. So the reason they were able to do that without killing their economy is that the Russian public debt is less than 20%. So they're in much better shape. So they were able to raise this rate to
Mhm.
20%, and that stabilized the ruble, and now the ruble strengthening,
Mhm.
and they've been able to cut it, and inflation is still high, but it's coming off.
Yeah.
We unfortunately can't do that because if the ECB, see, the ECB was waited like too long to raise rates to zero,
Mhm.
which is a joke. Even the Fed, even though the Fed has raised rates, they've only raised it to 1.5 to 175.
Right.
Where they need to raise rates is like Russia. They need to raise it to 15 or 20
Mhm.
if they want to bring inflation under control. So
Right.
this shows that the way to. it- I'm not a proponent of central banking, but if you
Mhm.
are going to have a central bank that's properly runs a currency, then Russia central bank is a good example.
Yeah. And so let's get to some questions. I got another article or two, but let's get to a question here. Here's something from Chris. Appreciate you, man. It says, when the Fed does roll out CBDCs, what do you think the exchange ratio will be for paper fiat? Will it be 1-to-1 or will it be worse? Thanks. Man, great question. My personal opinion is up front, it'll be rolled out as seamlessly as they possibly think they can do that. But then ultimately, once more nations jump on board and once they're all out, then I think there'll be some revaluations of some kind to where it'll definitely have to be more favorable for foreign nations come trade time. So I don't think it's going to be that 1-to-1 type of thing for the depositors. That'll be whatever you see balance wise on your app when you look into the Fed wallet, Treasury wallet, whatever it might be. So to start off that way, but then again, at some point down the line, it's going to have to be devalued severely, in my opinion. So, what do you think, Mr. Mario?
I don't know. I mean, it could be 1-to-1 because, like you
Mhm.
said, it's just going to look like a dollar. It's
Mhm.
just the way it's, and it will be issued by the Fed, though.
Yeah.
Uh, I think the way they could reset the system is that gold and silver will be a lot higher
Mhm.
for everyone, and that maybe that's the way we have to look at it.
Yeah. Yeah. How? Yeah. So the purchasing power of those units will definitely change, whether it's the paper form of a Federal Reserve note, as long as they're around, or the digital, solely the newly rebranded digital representations of a dollar.
Or they could do like in Latin American countries where when they have a new currency, they 1,000 pesos become 1 peso, one new peso.
Mhm.
So they could do that.
Yeah, it's so my next thought would be how will the removal of the notes eventually come about? Like, will there be a future date to where, say, for example, the $100 bills will need to be turned in or need to be? How will they
Uh,
convince people to get to turn in their paper, because paper is going to circulate forever? Will they still have the same amount of utility? Because
mm,
they're going to print less. I think they're going to print less, and just the supply over time will shrink, similar like the whole coinage shortage and all that type of crap, where they just simply will
I,
withhold new notes. But what do you think?
I think they're doing it already
Mhm.
gradually, and I think younger people already they're used to not using a
Cash,
note.
right?
And I think it's hard for them to stop it suddenly. So
Mhm.
I think it's just going to be over time. They could try to do what they did in India some years ago, but I think there'd be a revolution just overnight to say, "Oh, these notes are no good
No
anymore.
good.
You have to hand them back in."
Right.
You got to give them time. So, but and I'm not even sure they'll be succeed in bringing in a cashless society.
Right.
Some people have noted that very wealthy individuals they like cash for things like gambling
Mhm.
and other things, other vices where
Yeah.
they don't want to be traced.
Right.
And so there you go. I'm not too sure. I'm not,
Right.
that they
And
will.
I hope it does fail. So I hope people realize what's really at stake and become or learn to or appreciate being able to actually have something physical and tangible, even if it is paper that
Well, I
is a
guess
part of the
we
problem.
will we'll always have constitutional silver
Hmm.
or
Yeah,
what
one
they
hundred
call
percent.
junk.
Junk Silver. Here's a question or a thought. It says CBDC will be resistant, so central banks will let their paper currency hyperinflate, but the CBDCs will be fixed at first. Normal norm. Appreciate you, man. All right, let's keep going. So yeah, let's throw out some more questions, and let's see what we can do here. So feel free to ask me questions, and we'll share our 2 cents on it and go from there. I have another story or two to mention if we need to. Paper is no longer said the paper is going in the mass level. Let me see here. Less notes, more digital. Yeah, and a good example of people realizing the utility of paper was especially in Canada within the last I think earlier this month when I had a little internet outage and the telecommunications went offline, and there were stories about people were basically running to the ATMs, but even they were offline, and so cash was of a major importance.
I mean, I use cash quite a lot of times, but I also use my card. But also, what happened in China recently, I think, is it Henan?
Right,
They well,
right,
that's more to do with leaving your savings in the bank,
right,
but it looks like they bailed people in. Anyone who had more than $7,400, they
right.
said, "Oh, that cash is going to become shares in the bank," which is basically a bail-in. It's what they did in Cyprus. Another reason I think to get your weight up.
Yeah, 100%. So yeah, I definitely talk about that. Just that video of the tanks in the streets, like that right there was like wow, like, and that was an evening picture. So I haven't heard much follow up from that as to
Yeah,
the people's
and some
response.
people say that this is not real, that it wasn't there, but I
Mhm.
don't know. Uh,
Right. I know no matter what ever since March, April, people haven't been able to get their funds out. So there's definitely something going on. So it's
mm,
not like this we're making this stuff up. The tanks, take up what you may, but please look up CSRQSM at Oculus Labs. Okay, Miles.
hmm,
I'm not familiar with that. Let me.
yeah,
You know anything about that, or let me see.
uh,
Look it
uh,
up. CSRQ.
I think I saw something about that somewhere, a video, but
Let me see what comes up. What it means for future labs. Okay, here, Oculus Labs. Let me just type that in and see what pops
oh,
up here.
is this the
As a program that will be used worldwide to select governmental and banking institutions when the financial reset occurs. So this is okay. So looks like in some type of app. I'm not sure where
yeah.
it come
Oh, I
from.
see. Yeah, I think it's this social credit.
Mm,
Yeah, social credit. They'll
prepare
be.
for the Great Reset.
Yeah, I think it was Alaska Prepper who was talking about this.
Mm,
He did a video about this, and it's really dark.
yeah.
He's basically saying that unless you're a sovereign or an S, basically, unless you're a billionaire, you're
Hmm.
only going to be able to earn $1,000 a month. And so it's a bit like a Hunger Games society.
Yeah.
Uh, I I wouldn't, you know, don't let this scare you. I think it's a little bit too much.
Yeah.
These are guys who are apparently working for the EU. They're
Hmm.
like guys who check EU websites, and they're supposed to be good guys that they hack. They're checking for people hacking EU websites,
Hmm.
but they're spilling the beans about what's going on with
Yeah.
it. So, but it's a little bit like yeah, don't let
Yeah.
it's very, depressing, this thing,
So
so
yeah, it's more towards that one world approach towards
yeah,
seeing like bringing everything down into the hands of a
yeah,
smaller few,
I
which
mean, I don't think that's not gonna happen because already we're seeing people rising up, and if
Mhm,
they do that, but the argument is that they're gonna flush everything down so badly that
mhm,
people are gonna have nothing and they're gonna accept it.
right. Yeah, so we hope it doesn't get to that point, but it is what it is. Here's something about Cliff High. Mario says, I first started watching Mario when he was giving Cliff High BTC updates. What changed, Mario?
Well, what changed is that, uh, I thought Bitcoin was getting too frothy and too speculative.
Hmm.
like 2018, 2019. And I was always into gold and silver.
Yeah.
And I saw a lot of people jump ship out of gold and silver into cryptocurrencies. And yeah, that's what changed. But Cliff High was also the reason I started looking into Cliff High back in like 2010, I think, or even before, was
Hmm.
that he used to cover silver,
Hmm.
and that's one of the reasons why I did it. But I have benefited from cryptocurrencies because I post a lot of my videos on blockchain platforms. So yeah, that's the reason.
Here's another question here. I'm not familiar with. It says, "What is your thoughts on the ISDA market?"
ISDA.
Yeah, I'm not familiar with that. Do you know anything about that?
Yeah, it's the International Securities Dealer Association, uh, which is basically just bond dealers and across the world.
Hmm.
I think that's what it means.
Uh,
It's just like Wall Street, City of London,
mhm.
people who deal in big size and bonds and treasuries.
Yeah.
uh, is the is and I guess maybe he's asking that's to do with LIBOR and things like that. It's a professional. It's basically an association of broker dealers. That's the way I see it. ISDA, but I think that acronym is changed. ISDA.
Yeah, I typed in ISDA and I got something about derivatives and something.
Yeah, that's right. ISDA.
Yeah, so this is, what was the title at? Something about derivatives and whatever.
Yeah.
So yeah, I'm not familiar with it.
Yeah, the other thing that about crypto and Cliff High, yeah, he used to do the Alta reports, and he stopped that years ago. And I
Hmm.
used to summarize the Alta reports, and they were very interesting. And I wish he probably is still. It was the asymmetric linguistic analysis or something
Hmm.
like that.
Yeah.
He used to analyze language in the internet, but
Yeah, he was
yeah.
saying it was getting more complicated to do it because of just the internet and all the news coming out and all the misinformation, disinformation. It was just hard for to populate and grab actual data that was relevant because it was too distorted. So, yeah, for
Mm.
whatever that's worth. Yeah, I've always watched his videos even up until recent. I think he stopped for whatever reason, but he's been pretty on point. I think he was one of the first people to
Oh
really got
yeah,
people
I
waking
mean,
up.
I remember him predicting 13,800 Bitcoin when it
Mhm.
was way below that, and he was right.
Let me see here some, and he causes all both small and great rich and poor free to buy and receive a mark. Wonder if that means there will only be rich or poor. So, yeah. So, yeah. So, yeah. Of course, I've been doing more investigative work on my end, diving into the Book of Revelations, trying to better understand signs and times, and I've uncovered a lot of things that would really open my eyes that I'll be sharing more in the future. But it's like, yeah, it's just,
Mm.
yeah, it's the doom and gloom side of things. Is it has its purpose for entertainment, but it's really not that bad.
Yeah,
It's not really going to be that bad
the thing
if you
about
believe.
yeah, the thing about crypto right now is that, and even a few years ago, I noticed like people ex Goldman Sachs, people were getting involved, and
Hmm.
now it's been 4 years ago they didn't want to know, and now all the yeah, that's a little bit suspicious that crypto is supposed to be an alternative
Hmm.
space
Disruptor,
to the banking system,
right?
and it's become just as bad, as leveraged, as speculative as the banking system. And
Right.
I'm not saying that Bitcoin might not be a good software or whatever you want to call it.
Hmm. It's just funny how it's become the favorite of a lot of institutional players to where they're even counting on it, but they're going all around the true problems and the creators of the problem. Like they're saying that just Bitcoin in of itself can fix things, but what about the Federal Reserve? What about central banks? What about governments that already bought and paid for? Like, you don't know, you got to get rid of those people first, and that
Yeah.
way of
Yeah.
thinking before you talk about fixing the money. Like,
What about massive government spending and stuff like that?
right. Oh my good. Anyway, keep it going. So feel free to throw some thoughts, ideas. If you haven't already, make sure you hit that thumbs up button. Show your support for the channel. What else we got? Are there anything else sticking out? What are your
Jeff,
thoughts?
you says both you guys have helped open my eyes over the years. Thanks. Oh, you're welcome.
Appreciate it, man. Just trying to play my part. That's
Cliff
all.
High had prediction of gold and Bitcoin at 4,500. That could be possible, and that could be possible. I
Like
mean,
for the future, like coming up, or like was this old
well, it
Metro?
hasn't happened yet, has it? Because gold hasn't gone to
Gold at
4,500.
45.
But
Mm.
we could see a 1-to-1 ratio there,
That would be something else.
because that guy John Perez, he sees Bitcoin going down to around that level, doesn't he?
Yeah,
5,000 or 4,000. So
yeah, yeah, man. Yeah, because I think it'll go as low as the S&P goes, percentage wise. So it got a lot more room to go. What else? Anything else? One world government. I'm not seeing anything. So
there's who- someone here, Matthew Liz Wanizo, where collateral doesn't have to be deposit, just shown, and then you can get liquidity.
mm,
Hmm. I'm not sure what you mean by that.
yeah.
Yeah,
Feel free to add to that, Matthew,
yeah,
if that's a
yeah.
question, a thought, or let us know. What else?
Nacho Fool thinks crypto backed by commodities and
And our
and our
service will be the
service will
future.
be the future.
I mean,
I'm not sure. I'm not sure. I mean, the only gold money is usually the most marketable commodity.
mhm,
So, and historically, it's been gold and silver.
right. I'm not a
So,
fan of the word backed. Like just using the word backed. Like back
yeah,
requires trust, and there's still
yeah.
counterparties in between that trust
Mm,
factor. I'd rather just stay away from. Even though I know we transition towards a digital world, but man, like like I think it'll be a selling point. But then again, they're going to rewrite the rules and change it on us at some point.
yeah.
So
Michael Kennedy, CBDC is dead in the water. There will be a great reset, but not a world economic forum, IMF, etc. But by God.
yeah,
Well, let's hope so,
that's
Michael.
I do believe that one. All right. Well, we about 40 minutes, Mario. Let's get ready to dial down for the weekend. Of course, next week we're gonna have some more fireworks. I'm sure to talk about
Mm,
the Federal Reserve and see what they do, because it is
yeah, and
rate
the
hiking time.
GDP data as well the day after.
Yeah, so it's going to be an interesting week, man. But what do you? So other than that information, there, what anything else happening out there that's worth paying attention to or keep an eye on, or what are you doing?
Um, yeah, nothing really. I think people need to just batten down the hatches and like ignore a lot of the noise out there,
Hmm.
politics and even economics, and just keep doing what's best for them and their family and the community. And
Yeah,
also not to be scared of, just because we're talking about the fact that we're going into a recession, it doesn't mean to say you can't benefit from it. So
right.
yeah, don't let it scare you. It's not all gloom and doom.
Right. Right. I'd agree, man. And there's more positive if you have to really concentrate on creating more positives for yourself rather
Oh
than
yeah, the other thing, don't buy into this climate change thing.
yeah. Yeah, because that's a primary tool they're gonna use from here on out. So clearly there's an agenda behind that. So probably sometime next week we're gonna have more executive order information coming out. So I'll be chiming on that as well. I'm sure share my 2 cents. But anyway, with that being the case, people, as always, happy Friday. Be blessed, be safe. Continue to do the best you can to protect, preserve yourself, get your weight up, get your faith up, and everything in between. And just enjoy the weekend, enjoy the moment, and get out and get some sunshine in your system. So but be blessed, be safe. See you guys later. Peace.